Hello and welcome to the greatest hits of the Bulletin Board Heroes for 2019, a rundown of the best stock setups that we had on a charting basis. Starting off with Alpha Growth, you can see that the shares broke out at the end of November, and it was actually a requested stock from a number of followers on Twitter, and the call was that the break of the 1.2, 1.3 pence area could take the shares higher. In fact, the shares nearly tripled within a week after the trend line break, and since then still in bull mode, holding above the 50-day moving average at 1.8 pence, and at least while we're above that, we've got a chance of a retest of the 3 pence area. On to one of the stocks which was perhaps the greatest of the year. It comes in the form of AFC Energy. The reason for saying that is that we had a clear triangle break there, one from a post-May triangle for the shares, breaking, I suppose, 5 pence just at the beginning of November. You had a few days to think about it as well. There was an inside day following the breakout, so plenty of time to get the bulls into this situation, and judging by the rally that we had for the stock after 25 pence plus, a lot of people actually took advantage of that particular setup. Since then, we've seen the shares consolidate, but still remain above the 50-day moving average at 13 pence. Next contender is one that moved earlier in the year, Bidstack. Obviously, the shares have petered out since, but the big news here was the break of a trend line there from basically September last year. That broke in February. Again, the bulls had plenty of time to think about whether they like the situation or not, so it's between 7 and 8p was a potential entry point. There was also a bounce off the 50-day moving average in March around the 7 pence level again to give you a final chance to get in, and obviously after that, stock hit up to 40 pence at best, so massive move there for the shares. Usefully also that we had the 50-day moving average come in as a stop loss at the beginning of August, so a break below 30 then was the first sign that the stock was going to go into consolidation mode and obviously potentially even come back. So the technicals working well in that particular situation. A stock which is perhaps not so familiar to many people in the small cap area or the micro cap area, Centralnic. This one had a symmetrical triangle breakout in mid-November, quite a clear one there, breaking 50 pence. The shares then on the same day broke the 200-day moving average, so we had it poised above that line at 55 pence or 53 pence at that time for quite a while. Since then, the stock obviously has moved in a vertical fashion with a nice unfilled gap to the upside as well at the beginning of the month. So, but potential there for greater moves, especially given the way that we've got a golden cross buy signal that's just come in the last week. So everything going on there in a positive way at Centralnic at the moment. The only negative, of course, is the very overbought RSI, but obviously that has gone on, I suppose, since the shares were actually around the upper 50s. So RSI not always the greatest signal in such situations, such momentum situations. Eurasia mining was one of the big surprises of the year in terms of the breakout there. Stock had been languishing from the end of last year going into the October breakout that we had. On the day of the breakout, when the share was around 0.9, I put out a special charting call on the stock. So from 0.9, we had the technical visibility there, and the shares eventually peaking out around the 4 pence area, which is not far off where they are at the moment. In fact, they're in a rising trend channel based at the 50-day moving average at the moment, around the 2.7 pence level. Next situation comes in the form of Metalnrg. This was a nice setup in the sense that we had a forward looking type of chart here. You could draw a line running through from the start of the price action there in July this year, and once we had that peak in August, you could say that basically a sustained break of 0.3 pence would deliver or could deliver a rally. That actually eventually happened at the beginning of November, and even if you were late on the stock, i.e. getting in there above 0.4 pence, you still had a ride right up to 1 pence plus by the end of the month. So a wonderful chart there. As is so often the case, and as we've seen with other charts here, the stock still strong enough to remain above the 50-day moving average. So basically that's acting as a trailing stop there at 0.47 pence. Next situation is one that I called up rather grudgingly because of the history of the stock, and that's been one of the lessons of this year, that many of the stocks which previously been out in the cold came back to life in 2019, especially over the autumn. So the break of that April resistance line there at 0.22 was the start of the rally. The only difficulty here, I suppose, was the way that the stock fell back towards the 50-day moving average, stayed just about on that line before then delivering the big rally, the big move up to 1.8 pence, which was the peak earlier this month. The current situation is we're trading the aftermath of a golden cross buy signal, which tends to be a lagging indicator, but still is important, and in a consolidation mode here between, say, 0.9 and 1.2 pence currently. Another corker to look at comes in the form of Richland Resources, symmetrical triangle break, breaking 0.1. Hanging around for a day or two and giving the bulls plenty of time to get in, and also even waiting on a break of 0.12 is a potential entry point as well, a bit later after that triangle break. Obviously, even if you were late on that, the 0.45 peak meant that you would have hopefully tripled your money. Current situation, it will be interesting to see whether we remain above the 50-day moving average at 0.11 and whether that offers a fresh entry point for the longs. 0.12, obviously the old resistance in August, and that could become new support for the shares. Stock which has changed its name to a similar, which doesn't help a chartist like myself, but Yolo did come up with the goods and was mentioned here in the Bulletin Board Heroes at the start of October, around the 3 to 4 pence area. Again, it was a stock which you wouldn't expect great things from necessarily, given the previous charting history of the stock, but this has been an autumn of big moves for unlikely names, and obviously you can see that the stock has delivered a near vertical move over the past couple of months, and still looks to be, in fact it's now over 20 pence, still looks to be very much in a bullish kind of setup. On to another happy situation coming in the form of Rockfire Resources. Here we actually had an interesting scenario here where we had the break of a triangle. Stock hung around for 2 or 3 days just so people could decide whether they want to get involved or not, and then we had the gap through the 200-day moving average. In fact, even if you bought after the gap through the 200-day line at, say, a penny, there was still plenty of upside on the shares, approaching the 2.3, 2.4 pence area at its best at the beginning of December. On to Union Jack Oil, which has had a quite an important year as far as its fundamental progress is concerned, but the big move here actually came in May, the beginning of May, with this symmetrical triangle break, and that has probably been the setup, rather than the falling wedge, actually, the setup of note for many stocks in 2019, and plenty of time to get in there around the 0.1 pence level, and obviously the shares eventually tripled by August, and gave bulls of the stock a relatively easy ride. The other point to note there again is that the 50-day moving average, once it was breached, basically signaled that the best of the rally was over, and that's obviously where we are at the current time, waiting for a reassertion of that particular move. That's it for me today. Stay tuned on Bulletin Board Heroes. I'll be publishing my best charting stocks for 2020 pretty soon.